I'm Peter Katkov. I'm the CEO and founder of Apex Risk and Insurance Services. We are a boutique commercial insurance firm based here in Carlsbad in San Diego. We focus on a few key areas: hospitality, construction, technology, obviously the wave pool space. Our clients use us because we are a consultative, forward-looking, proactive agency. We really take the burden of the insurance process off of our clients' plates whenever possible, and really founded the agency with the intention of filling a void that has been left in the industry in the wake of agency acquisition. So big private equity-backed firms have bought a lot of the smaller boutique agencies that really have forgotten how to treat their clients and how to help them navigate this very complicated environment. So I know that most are not interested in knowing how the watch is made, but rather what time it is. The insurance challenges of a dynamic wave pool project, a static wave pool project is often misunderstood, often the last thing to be considered in an operating budget. And when developers and operators understand that they may spend more on insurance on a given year than they do on energy, it kind of raises the awareness of how important this piece of the puzzle is, not only in cost, but really the structure of the program. What Wes does and building a really robust risk management program is kind of the first line of defense to keep your patrons and your property safe. But the insurance is really the last backstop between an incident and your balance sheet, and protecting the investment that you've collected from your partners. That's what the insurance program is really intended to do. So there's several key components. I'm not going to get too deep. I just want to kind of glaze over the surface of kind of some fundamental key components of any insurance program for both the development component of a wave pool project and the operational piece. Similar but different. There are some nice to haves, and there are definitely some need to haves when considering building any sort of project. So GL, I can see your eyes glazing over, so I'm going to try to be brief and simple. So general liability, fundamentally speaking, is protection against bodily injury and property damage to a customer of a wave pool. So on the development side, you're talking about site liability and you're talking about construction defect. So traditionally, if you're talking about a stick frame apartment building, construction defect is mostly window leaking and structural issues. And a RAP policy or an OSIP policy encompasses both the site liability and the construction defect for a project. And when you're talking about a wave pool, there's a lot more moving parts, a lot of different amenities, a lot of outbuildings. You may have different construction types. We've talked about 3D printed concrete, modular, stick frame, cinder block. And that range of construction materials impacts the construction defect exposure. When you're talking about a 3-acre concrete pool, what happens if there's a crack and the whole pool has to be drained down the road? That's going to be a construction defect exposure on the development side that's going to trickle into ops. Once you're on the ops side, GL is your slip and fall. It's injuries in the pool. It's liquor liability. All of those bodily injury and property damage exposures to the patrons. And then excess are the limits above that primary GL policy. So we may have $1 million layer of GL as the primary, and then stacking umbrella layers on top of that. You may have a ground lease with the city that requires $25 million in limit. Well, that's going to be a significant different cost than if you only wanted to carry 5. So being involved early in those lease negotiations is crucial so that you can understand the cost implications of those negotiations down the road. Work comp is protection for your employees, generally statutorily required, except for Texas. It's going to be a big piece of the puzzle. When you have 140 employees or more, a couple hundred employees at a big park, that's going to be a big driver of the cost. Fortunately, the work comp bureaus use the amusement code. It's a pretty all-encompassing code. Every single park, hospitality, wave pool, lifeguards, photography, concessions, everything is all going to be bundled into that one code. So it's relatively simple to underwrite. And then property insurance is on the development side, it's covering the sticks and bricks as they come out of the ground. So if you have a $140 million CapEx budget and you have a fire or a flood or a theft or vandalism sometime during the construction period, it's going to replace that property. And more importantly, it's going to cover the delay in completion that event caused. So that's a builder's risk. That's the portion of the construction policy that covers property. And then once you're operational, it's all of your capital equipment. It's your buildings, your structure, and most importantly, it's your business income exposure. So loss of revenue due to a covered event is going to be covered by your property policy. Then some of the nice to haves, we can talk about directors and officers liability. Most of these large projects have some sort of institutional venture capital, family office investment, and protecting those directors and officers that sit on those boards is a crucial piece of any puzzle. If you get sued by a competitor, a vendor, a bank, directors and officers liability is going to backstop that balance sheet and defend the board members and the entity against those allegations. Employment practices liability, especially in California, pretty crucial coverage these days, especially with a workforce that's going to be mostly lower wage. Wrongful termination, sexual harassment, discrimination, and hostile work environment are all defendable causes of action on employment practices liability. I wouldn't go without it in California. It's probably one of the most employee-friendly states from a litigation perspective. And then another interesting coverage that most people are not considering is cyber liability. 10 years ago, cyber was most relevant to protect your data from theft of others. So, what's your data worth to someone else on the dark web, for example? But more relevant now is what is access to your mission critical technology infrastructure worth to you? So ransomware is a multi-trillion-dollar industry these days. And if your wave generating technology that the programming that creates those waves is not available to you and you can't run, that's a cyber coverage that cyber policy is going to protect. So how did we get involved in the wave pool industry? 5 or 6 years ago, John Luff reached out to us, and he anticipated that this piece of the operating puzzle was going to be a challenge. And it has continued to be, even with 4 or 5 years of lead time to get ahead of this. And our job is really to be the quarterback, to understand the unique exposures of one park versus another, one operation versus another, and help build a playbook around how to accommodate for those exposures, help design a program that is both cost effective and risk effective, so that we can ultimately have a profitable park, run a safe operation, and keep the bank account out of harm's way. Blake, who's in this room, actually gave us they've been a great partner of ours. Yeah, go ahead, Blake. No. It's partners like Blake who have trusted us in the process. Obviously, our background has been very focused on a couple of adjacent industries, right? I mean, there are no wave pool insurance brokers in the country, and to be able to take the experience that we have in several other industries and the relationships that we have with our carrier partners to be able to tell a story, to be able to convince an underwriter that ultimately doesn't want to lose their job, that they're making a good underwriting decision. That's our job in this process, is really to run that process and to be the storytellers to try to get an underwriter to do what they generally don't want to do. And the biggest question that we're often asked is, what is this coverage going to cost us? And it varies significantly. Just like Wes was saying, the management or risk management plan can vary depending on the amenities that are offered at a given property. If you have a climbing gym, if you have a pump track, if you have a concert venue, hotel, all of those factors are going to play differently into the OpEx budget from a line item basis. And in this engagement, or in our engagements with feasibility study stage, pre-entitlement developers, we will go line by line and look at what that operational spectrum looks like and assign a cost, an estimated cost to each one of those items. But generally we're seeing between 4 and 7% of top line for a dynamic pool, and sometimes even higher on a small wave project, just because the revenues are lower. Carriers have minimum premium thresholds. They're not going to play in a space for less than say 100 or 150 grand. So when you look at that as a percentage of top line, they're very impactful budget numbers. So
Peter, something we've talked about, and you say operation opening day when people do costs, but the operation insurance is going to start before workers' comp. So it's one of the things that I think when people are planning, if you have a $600,000 insurance budget, you might want to factor in 40% of that for pre-opening budget costs.
Yeah, they definitely overlap.
And I think that's a mistake I see in a lot of people's portfolios. They don't plan for that operational insurance before opening day.
Yeah, that's right.
Sure.
Does your company offer project insurance? I know you talk about property insurance, but I know with my company, I've saved millions of dollars doing project insurance because I'm not paying the general contractor's insurance portion.
Yeah, so that's a wrap-up policy. So there's two components of project-specific development insurance. There's the wrap-up portion, which is the GL, the casualty, and then there's the builder's risk, which is the property portion. And in a very large project like this, the developer's writing the check for the insurance, whether they're paying the GC to secure their own or they're paying for it themselves. And we generally advise the ones writing the checks to control that program. The GCs are going to use it as a profit generator. They're going to mark it up just like they mark up drywall and concrete. So we generally will, the developer controls that project-specific wrap-up policy. Yeah. And then all the trades, the GCs, they all enroll. If you want, you can charge back for a participation in that wrap-up policy, or you can just have them write their bids net of insurance with no insurance included. Yeah, good question. There's our big team. There's Lucy. Thanks, guys. Sure.
So if you have, say, a particular wave pool A in one state in the United States and wave pool A in another one, is the cost of your insurance going to be vastly different state to state, or is it fairly similar? Because obviously I'm thinking from an international standard.
Sure. The biggest variable is on the work comp side. So every state, which is so the work comp is the employee coverage. So every state has different filed rates for a given class code, and it depends on a lot of factors, state by state. California, Texas, Florida, New York are among the highest rated codes, or highest rated states for this class code. And then depending on which municipality you're in, it can be lower. So that's probably the largest variable from one state to the other. The general liability property rates, with a couple of exceptions, Gulf states are probably a little trickier. California, because of fire, can also be a variable. Yeah, welcome. Yeah, Wes.
Some in the water park side of the business, I know some of the insurance companies factor in the actual city for like the litigious plaintiffs friendly Vegas, right, being one that's very, do you guys factor that in to some degree?
I haven't seen a significant variance on the GL side, with California being the exception. With how plaintiff friendly this state is, the rates are definitely higher here than everywhere else, but that's really the only exception. Yeah.
The answer may be yes to this, but if we are using your company and we're in operations, do you offer risk management, consulting services during operations? Like something's happening. I need to know. I need some advice on what to do.
So we do have retained counsel for claims management outside of panel counsel that the carrier selects, right? So the biggest driver of that claims management process is really the carrier and the carrier partner and their assigned counsel. But we generally default to companies like Wes's, from a higher level risk management process, if that answers your question. Yeah. Cool. Thanks, guys.
Thank you.
Yeah.